The world went into lockdown and millions of people lost their jobs. More than 20 million jobs were lost in the US. And the road to recovery, it's still pretty early stages. So why have used car prices climbed higher? Of course, top of mind, chip shortages and inflation. Those have dominated recent headlines, although there's more to the story. So let's go ahead and back it up a bit. To counter the self-induced recession, the government fired up its old printing press. It's pumped trillions of dollars into the markets. This printing press analogy, it's not great for our modern monetary system, but it still gets the point across. The government has used different techniques to keep money moving in our economy. Many of us saw checks directly from Uncle Sam, multiple checks. Governments also increased unemployment benefits and other financial assistance. But the big one, the feds have pushed down interest rates. And that's great. It's really helped prop up many retirement portfolios. Although I'm sure there's going to be some negative side effects from the government's market manipulation. It's really unprecedented. For example, total job openings in the US have climbed above 9 million. There are over 9 million open jobs. But people are either unable, and that probably is the majority of them, or unwilling to fill these openings. Some of the financial incentives from the government might be deterring people from taking some of these jobs. But that's a topic for another time. Thanks to stimulus and lower rates, more people could afford cars, or at least their monthly payments. The decreasing interest rates put downward pressure on monthly car payments. People could afford more. And of course, this helped push up car demand and prices. And we've seen a similar trend with the housing market. So low interest rates have played a huge role in pushing up used car prices. And with recent updates from the Fed, consensus shows that their first interest rate hike will likely come in 2023. Of course, that might come a little sooner depending on inflation and some other indicators. But for the rest of this year, it looks like low rates will stick around. Another overlooked contributor to increasing used car prices was people not wanting to use public transit. And of course, more people are starting to return to work. To avoid coming in contact with COVID, some people just want their own cars and their own space. So that added a little slight upward pressure as well. Now for the big one, recent used car prices have jumped primarily from shortages. There are huge supply constraints across the globe. Delivery times for some new cars are more than 6 months out. One family member has already been waiting on his new Toyota truck for maybe 4 or 5 months, and there's no expected delivery date. Unfortunately, it doesn't look like the chip shortages will balance out anytime soon. Many analysts are predicting well into 2022. So car prices will likely remain higher for the rest of the year. If you're in the market to buy, tough luck. But if you're in a position to sell your used car, now could be a great time. The market is always moving, and these shocks are hard to predict beforehand, if not near impossible. That's why it's important to invest and diversify your portfolio. For example, my investment in Intel, it's worked out pretty well. I bought shares back in October of 2020. To see why I invested in the company, you can check out my recent research here. Maybe the dividend income from this will help me buy a new car in the future. I have some grand plans in store. As always, I'd really appreciate it if you just tap that like button down below as well as subscribe, and please let me know if you have any questions.